The market that we're in is always changing, and it's always dynamic. But what we're seeing is that the things that used to be headwinds are now tailwinds for us, and particularly suburbanization, work from home, all of those things are bringing the customer closer to our center more of the day.
I'm here today with Jeff Edison, Chairman and CEO of Phillips Edison and Company. You noted during a recent earnings conference call that you are currently seeing more pricing power in PECO's grocery-anchored portfolio than ever before. How are you turning that pricing power into internal growth, and how much of that is sustainable?
Well, first of all, thanks for having us today. The market that we're in is always changing, and it's always dynamic. But what we're seeing is that the things that used to be headwinds are now tailwinds for us, and particularly suburbanization, work from home, all of those things are bringing the customer closer to our center more of the day. And there's been very little construction in our business over the last 15 years. And so what that has done is it's created really strong demand while there's very limited supply. And that's allowed us to push our occupancy to record levels, pushed our renewal percentage to record levels, I think 95% this last quarter of renewals. Our renewal spreads are at 16.1%, very strong numbers. And then our leasing occupancy is the highest it's been in the history of the company. So we're in a really strong spot, and so we're using that pricing power to drive the returns.
And PECO has a smaller format when compared to shopping center peers, with an average of 115,000 square feet. What are the advantages of your smaller format?
We really believe that format drives results. And the reason we believe that is because if you have a grocer who takes up 50 to 60,000 square feet of your space, and you have 50,000 square feet of small store space, the grocers drive traffic. You shop at a grocery store 1.6 times a week. That's the most of almost any retail that there is. That traffic drives the consumer to be close to our small stores. And then the small stores feed off of that with necessity goods. And when you put those two together, it drives the results. And we have the highest level of occupancy among our peers. It's driven by the fact that we have the right format with that big driver of the grocer, and then the necessity goods that are driven by our small store space.
You are expecting $200 million to $300 million in acquisitions in 2023. Can you speak to trends you are currently seeing in the transaction market?
Yeah, well, we had a really good first quarter. We bought $80 million net of new assets, Publix anchored centers that we feel really good about. The market has slowed. We're in a transitional time where cap rate recognition and return recognition is evolving, and we're having to be patient in that environment and be very deliberate in terms of what we're looking for, which is a 9% unlevered IRR. And if we can find that, we're going to be very active. If we can't find that, we're going to go at the pace that allows us to be able to meet those very defined goals that we're trying to get to.
And what is your outlook for the grocery-anchored shopping center segment more broadly?
We have been doing this for 30 years, and we're in the best operating environment that we've been in 30 years. And again, it's that supply and demand that we talked about earlier that has been able to drive those, that really strong environment. So I'd say we're very positive about the business. On the operating side, it's great. We're working through the price recognition that you have to when you see pricing change because of the increase in interest rates and the cost of capital. So that's working its way through. We're still able to find deals that we're able to transact on, but it's a slower pace than we would like. And so we're very optimistic about where it's going to go on a long-term basis, and that those fundamental drivers of demand and the lack of new supply are going to continue to be, we think, catalysts to really good operating results and good overall results for PECO.